The event horizon for the Costco dad should not be your event horizon. Your event horizon is October 22nd, and you don't care about the presidential election as far as your gold and silver positioning is. These people are hyper focused on the election, okay? After the election, on the other side of the black hole, they could be selling it $100 lower. They could be causing it to go $100 lower. I'm just saying to keep your head and don't be one of them during this time frame. Expect more of this leading up to the election and possibly much more of it afterwards if things do not go smoothly. Remember, the other side of the black hole doesn't have to be $100 lower. It could easily be $600 higher, right? It just could. I'm not betting on the election to get us $600 higher. I'm betting on the rest of the year and next year to get us $2,000 higher.
Gold, which traded as low as $255 per troy ounce in 2001, has enjoyed three distinct rallies since 2000, including around the 2008 financial crisis, the COVID-19 pandemic, and the last 2 years' global inflation bout. The latest rally comes as most experts believe the odds of a U.S. recession are unlikely to occur imminently, eating into gold's historic boost from heightened downturn fears. Managing partner at Echobay Partners LLC since 2008, VinceLanci envisions that while gold could swing up or down post-election, focusing on a long-term rise well above $2,000 by next year. He expresses that while Costco dads are fixated on gold due to election fears, savvy investors should look beyond this short-term focus. Renowned analysts, including Vince, observe that heightened fear surrounding the election is fueling a surge in gold purchases. He notes that gold's recent rise at 9 a.m. reflects this nervous order flow but warns that market reactions post-election could be unpredictable, with prices either dropping or spiking. Based on market fundamentals, Vince shifts focus from the election to the upcoming BRICS meeting, predicting a significant announcement on gold and oil around October 22nd. He believes this event could mark a turning point, with market prices for these commodities becoming more liberated. This year's BRICS summit, taking place in Kazan, Russia, from October 22nd to 24th, 2024, brings together a coalition of nations eager to discuss issues that could reshape global finance, including promoting local currencies and pursuing de-dollarization. One indication that BRICS is preparing for such a financial reset is its unprecedented hoarding of gold. In the past 2 years, BRICS members have bought gold at record levels. The monetary metal has historically been used to recalibrate currencies following a financial or monetary crisis. Now we present the clips of VinceLanci's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
Gold's event horizons. There are 2 event horizons coming. This morning, I was looking for a word that was a synonym for inflection point. It seems to be a word that's beaten to death, and the other words were too dramatic. But event horizon came up there when I typed in physics or something. I wanted to get something that was a little bit less salesman-y. Anyway, event horizon. Event horizon is a theoretical boundary around a black hole beyond which no light or other radiation can escape, a point of no return. That's interesting because for most Americans, the presidential election is a black hole for their investment decisions now. And as such, no light or balanced ideas can get into them or even escape from them. So they are hyper-focused on the center, the black hole of November 5th. And they don't know what's coming out on the other side. And they're positioning themselves for that. This is evidenced in observable market behavior, such as the increased purchases of gold bars from Costco. We'll get to that in a minute. And the newfound love the press now has with gold and headlines, even if only to get advertising clicks. This is an hourly chart of gold going back over each yellow line there is 9 a.m. 9 a.m. is marked. And that's so basically it's 1, 2, 3, 4, 5, 6, 7 yellow lines representing 7 9 a.m. moments. In each of the lines that are yellow, so the ones for almost all of them to the right, starting with, let's say the 5 on the right. All right, the 5 on the right, the last 5 days, the gold market at 9 a.m. has gone up. From 9 to 10, it has gone up. On October 1st, on October 2nd, on October 3rd, on October 4th, Monday, October 7th, and now Tuesday, it would seem to be it's on its way to going up again. Now, why is that? That's because Americans are buying this now. That's because order flow is coming into firms in anticipation or fear of the election or inflation or other potential risks, geopolitical and otherwise. And they're saying, I want to own some gold. And this is on the back of reports like the one we showed you a little less than 2 weeks ago from Goldman Sachs, the mystery buyer. We come back to the event horizon concept again. These people are hyper focused on the election. Okay. And as such, they're not really thinking about the consequences if they're wrong. And so after the election, on the other side of the black hole, they could be puking. They could be selling it $100 lower. They could be causing it to go $100 lower. I'm just saying to keep your head and don't be one of them during this time frame. All right, continuing with what I wrote there. Expect more of this leading up to the election and possibly much more of it afterwards if things do not go smoothly. Remember, the other side of the black hole doesn't have to be $100 lower. It could easily be $600 higher. Right? It just could. I'm just not betting on that. I'm not betting on the election to get us $600 higher. I'm betting on the rest of the year and next year to get us $2,000 higher. All right. The event isn't where I'm placing my bets. All right. But this is the black hole we will enter, and you do not know what will be on the other side. God, event horizon is such a good explanation. Fortunately, this is where we have an advantage over the Costco dads. Fortunately, October 22nd is a trial run for those who follow BRICS activities. It's kind of a black hole leading up to the black hole. Expect, this is what we believe now, at least what I believe anyway. We, the royal we, expect some significant announcement focused not just on gold, but on oil this year for purposes of liberating the free market price of both. Consider that moment, your peak over the horizon as to what's coming down the road on the other side of the black hole.
While reflecting on the latest news, VinceLanci discussed data around Costco's precious metals order flow and how Costco dads are starting to bring gold mainstream. In the background, Costco has been getting gold and silver back into the consciousness of Americans while continuing to have strong sales. According to a Bloomberg survey, the gold rush that started last year at Costco locations across the U.S. is continuing as bars keep selling at a time when bullion prices are soaring. Costco began selling gold bars to its rewards members last September for about $2,000 each. In late January, it started offering 1-ounce silver coins in a pack of 25 for $675. Most recently, the retailer has started selling 1-ounce platinum bars for $1,089.99. Regarding Costco's gold sales, Vince points out that while mainstream shoppers are buying, they may not offer long-term stability. Meanwhile, he highlights parallels to the 2008 crash, predicting that inflation could halt rate cuts. He also forecasts that China's economic issues may trigger massive stimulus, driving gold demand. Let's get back to the interview.
Costco has managed to create a unique intersection between convenience shopping and gold investment. Despite gold hitting record highs this year, demand for bullion at the warehouse retailer remains strong. Shoppers flock to Costco for competitive pricing on gold bars and coins, making the precious metal more accessible to the average consumer. This surge in interest is driven by the growing appeal of gold as a safe haven and inflation hedge, as well as Costco's ability to offer prices and undercut traditional dealers. Okay, this is extemporaneous. There's so much going on in this article, in what Bloomberg wrote, and what we wrote up. Not only are they telling people that gold is something that should be bought now, that's a good thing, but they're also telling you that Costco's where to buy it. And there's merit in that. I mean, not in telling you to buy it at Costco, but they have the traffic. Costco is a shopping mall, and you're already there. You're going to buy your, gold there. You're going to buy your iPhone case there. They're treating gold like it's just another product. Now, they're not appealing to your normal coin buyer. They're appealing to your neo-Keynesian suburban upper middle class person who wants a Coach purse, right? Who wants a new golf club. And these are like trinkets for them. Now, do these sound like people that you really want to rely on to make to underpin the market? Well, the obvious answer is no, but the other answer is yes, because it'll keep happening. Just don't expect it to help you through the election. All right, so here's gold for the last year. Here, Josh Young. I bought one. Now, I don't know who Josh Young is, but apparently Bloomberg thinks he's important. This is another thing. They go out of their way to point out that gold coin sales plunge as retail buyers balk at record prices. We're witnessing gold becoming a mainstream item, and that's good for the price, but it's going to revolutionize the business as the price goes up. I grew up in an inner city environment with a corner hardware store. They're gone. Corner hardware stores are gone, right? Except for New York City, bodegas and small grocery stores, gone, replaced by supermarkets. Hardware stores replaced by Home Depot. We're big boxing gold now. Equity recap, 2008 is calling. U.S. equities ended lower on Monday amid rising oil prices and treasury yields. September 2007, we lowered we lowered interest rates 50 basis points. In 2008, the market started to crash amid higher oil prices and higher treasury yields. Keep that in mind. Tuesday, October 8th, NFIB Optimism Index. Small Businessman Index, it's an important part of the economy, but I don't think the market's going to be looking at that right now. I think they're more interested in the inflation again. Now that we've gotten the rate cuts, it's all about if there's no inflation, we'll be okay. If there is inflation, we won't get any more rate cuts. Quick look at the markets again. Okay, let me go back to what happened last night. So China, we'll go back to the hourly so you guys can see that. The news out of China was bad for their stocks. So if their stocks are going to drop, then other things that Chinese speculators would buy drop as well. So sell stocks, sell silver, which got annihilated last night, right? Sell silver, sell copper, and sell gold. And all those things drop, silver more than gold. But it's what happens afterwards that tells you what's going on, right? Copper stayed down. Silver climbing back, gold now positive. All right. So China is in a bit of a problem here. Now, if you're looking for how it resolves itself in China, it resolves itself with probably the biggest, most massive stimulus you will ever see in your lifetime if this continues. It will be them printing money and throwing. It'll be helicopter money. Instead of helicopter Ben, it'll be helicopter Xi. He will be throwing money to people so that they spend money. They will panic to get people to buy stocks. And the people will take the money and they will buy gold because stocks don't go up for them.
Gold and the related exchange-traded funds are among this year's best-performing assets, partly helped by interest rate cuts. While Costco dads fuel the trend, long-term stability in the gold market will be shaped by macroeconomic factors such as inflation and geopolitical developments, particularly in China. As Costco makes gold more accessible to the average consumer, do you believe this mainstream surge in interest will strengthen or destabilize gold's long-term market potential? Drop your thoughts in the comments section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.